Hey, it's Edge here. Today we're taking a look at technical analysis for natural gas. I'm going to be using Fibonacci numbers, volume, support and resistance, geometry and wave analysis to establish an outlook into the markets. I'll cover wave analysis with Elliott wave theory and provide multiple possibilities the price may take and give reasons why I prefer a account over another and at which price levels we should be shifting our bias. Natural gas is a new asset for me and this was voted in the Discord, so if you want to join that and affect or have an effect on the decisions and assets that I'm going to be covering in the future, join the Discord. But first of all, let's take a look at RSI. We're currently looking at the 6-month time frame and we have had this trend line for quite some time. Since 2000s, we've had this trend line that was broken here at January 2020. After that point, we've had a massive rise in price and in RSI, creating a signal of some sort to say that whatever this was here has been ended. Now, on weekly time frame, we've had these two contracting trend lines. The top one is declining and we have had now 3 or possibly 4 times, however you want to say this or count it, as a resistance. Now we would be looking for more dumpage downwards unless this breaks and creates some kind of new high here. This lower trend line here is only just now established and we can have this as a support if the price comes down towards it. On daily time frame we can have a look into this as well. We have loads of bearish regular divergences, 4 actually, and 3, 1, 2 and 3, higher highs on price and lower highs on RSI, and definitely a sign of some kind of dump coming soon. Now let's take a look at some of the support and resistance overall. Let's go back to weekly. Let's hide couple of things so we don't need to look at them at the same time. Overall, we have these support and resistance lines on monthly have been really good. Most likely, again, there we go. So currently we are again hitting our heads to this trend line that we've had all the way since 2001 of January. We've had weeks through it until we break it, come back to it, have it as a support, bounce, resistance, through, and now again acting as a resistance. If we are not going to be able to clear this, we are most likely coming back to this area of resistance or support now that we've established with this trend line here, or this horizontal line. We've had again multiple times of support and resistance on it, so we can assume that it is going to be acting as support now as well. If we are going to break this trend line or this vertical line here around $9.20, we are going to be looking at the next trend line all the way up here at $14, all-time highs. Couple of different trend lines. We had this one that is most likely useless at the moment. We did not really hit a good target here either. We could say that we almost hit this trend line or this parallel channel, but to me this is not really affecting too much. The more interesting one was this one where we broke out. Of course this was again one of those best fit channels where the price is placed free-handedly basically here, and you can see that on the midline we do have some kind of confluence and some kind of effects on it. But I wouldn't be too focused on these ones. The horizontal lines here have been really good areas to look for, longs and shorts. Currently I would be looking for shorts here and have our stop above here if we are indeed deciding to go short here or taking any trade here. Now let's get into the Elliott wave stuff. We have 2 different counts here that I'm going to be presenting on higher time frame. First one is saying that we have A, B, and C into W, W, X, Y into X, and A, B, C into a Y wave. On the B wave, we have a triangle that is supported on RSI as well. Let's get into closer, maybe weekly. Weekly time frame. We see that we have this contracting pattern here. Where's the EC? There is the C, and E is here. So yeah, it works out in RSI as well, which is something I really need to have to establish any triangle pattern. In any case, this brings us to our A wave. At that point, after that point, we have a W, X, Y into this W here, A, B, and then looking for the C wave here. Other scenario is that instead of the W here, we have it right here. So let's take a look at that option. We still have the A wave on this super cycle in here, but we just have shifted things here a bit. So this would be an ABC here into W, ABC here as an expanded flat into X, and then 3 waves, a zigzag here into wave Y. Both of these counts have some kind of ending or some kind of low here, and we are expecting some kind of C wave for this structure here. On this one, we are having the wave B of supercycle ending here, and now we would be looking for wave C. On the other one, we are looking for just a primary wave, which again would be much shorter. On this one, we do have the X wave as a higher time frame expectation. Where do we have that? Invalidation all the way up here, so we don't really need to worry about that either. ABC on red here, we can see that 1.618 here. If we are getting above that, around $10.90, we could be thinking that as this structure or this whole count as a lower probability. Currently, I'm thinking this as lower probability already, as we have not really that good of looking count. We had this clear WXY here, but looking at the time this whole structure already has used, if we are thinking that wave W is only here, we could be expecting that this whole structure should be over much sooner. 1.618 comparison for the first structure here comes already here at 2028, and that would definitely be almost the maximum I would like to see, at least time wise. Now on the other one, we already have completed the wave Y here, and definitely looks a bit better. 1-to-1 extension is almost hit for this WXY pattern or the A wave for the wave B, and now we would be looking for wave C. This whole structure would be corrected and completed way before the other one. I'm preferring this as well, just because of those things. 1-to-1 extension here for the C wave around $22 on a logarithmic chart, and $16 just above these highs that we've had on 2005, around $16.63. But again, we'll look into this structure next. Let's zoom in a bit and go through this structure. So again, here is the end of the B wave. Again, we are coming to the 85.4 retracement of the A wave, making it possible to have this C wave to complete the flat correction. Overall, we would be looking at a 1, 2, let's zoom in a bit to look at the substructure. So 1, 2, 3, 4, 5 as a primary structure into wave 1. Now, I'm not sure, this is probably a wrong degree, as this is already, this hasn't taken basically any time. Usually this cycle should be longer, at least I would think, but again, we'll just use this for now. For me, this looks a clear 5-way structure here into wave 1, 3-way structure into wave 2. Here inside we have a zigzag, another zigzag, and another zigzag. So a double zigzag into wave 2. So we would be expecting a flat or a triangle pattern in the wave 4 of this cycle wave structure. After that point, we're looking this as a 1-2 of primary. And then we would be looking into more structures here. I'm labeling this as a wave 3 as we don't really have other waves, or well, we do have other ways to label it just because of this structure here. Again, this is really deep for a wave 4. It goes to the golden pocket here for this structure here. If we are again pulling it from the wave 2 to wave 3, where we would be normally expecting the measurements taken, we're again at the golden pocket. But to me, this is really deep. It is possible that this whole structure is a 1-2 and somehow another 1-2. Now the wave, this structure here, the second possible 1-2, is so much larger than this wave 1. Or not too much, but again, it is larger, around 1.236, so 23% larger than the first structure. And usually when these nested patterns would happen, we would have structures that are smaller as the degrees get smaller. So this would be 1-2, a 1-2, a 1-2. You see the pattern? So each of the smaller sub-wave structures would be smaller in price than the previous one. This doesn't happen here. Now, it is still possible that this is a wave 4. It hasn't invalidated the wave 1 here. So that is the main thing. The whole goal of wave 3, at least on this count in primary, is to create enough space for wave 3 to not come into the wave, or for wave 4 not to get to the wave 1 area, which happens here. So that is fine for now. Now, I don't even want to see here on arithmetic scale how low this goes. Probably like 70% or 80%. Not well, 70% is more likely. But again, very, very deep. Possible wave 4. I'm labeling this as the wave 3 of cycle, as we did get to the 1.618 extension here for the 1, 2, 3. Then we would be looking for wave 4 here around the 38.2 retracement area. I'm going to be digging into this structure a bit more and present the options that I see on another video, and looking into these substructures and wave structures more, I think, because this is not too good looking overall. There is multiple different scenarios here for sure, and those deserve their own video. But I think that is pretty much everything I wanted to share today. If you have other accounts you would like to share, there's a link to my Discord server in the description below. Also, if you would like me to update a certain other asset, let me know in the comments below. But for now, I thank you for watching and hopefully see you on the next video as well. Bye bye.